Okay. What's up to everybody out there? First of all, I'm gonna go ahead and, pull the shades off or whatever. So today, topics gonna be, you know, about, different, you know, business and finance procedures and models, which go back to, individual principles. And, one thing you gotta always understand and kind of really remember that, we all have our own different way of thinking because the sights, and when I say the sight, everybody see colors different. So that means everybody have different understanding. So all sights see different things. So with that in mind, you got to remember that, you got to always kind of figure out and balance what's your strategy, what's going to work for you the best. You could have different content information. I consider information, but content we going to say, based on different, real, knowledgeable, experienced people. But you still got to be able to incorporate it and tailor it to where it's going to work for you. And I guess you may have some things that's one fit for all. And they do have systematic systems like that. But if you're a type of person like me, then you always looking for your own infrastructure. See, I'm not good always at following, the instructions. You see what I'm saying? But I'm good at building my own infrastructure. Okay, so let's get into what I'm here to talk about today, because I have some really vital information that I want to distribute to you, today. And first I want to talk to you about and share with you is about, how important it is about having legal assistance. And we gonna just break it down from, two-man people, and maybe you'll see the difference between having, a corporate attorney, whatever type of he's good at. And so you got your corporate attorney, or maybe a CPA, certified public accountant. You got other ones, but why I'm saying these two, because these people actually could provide you with legal advice to a certain extent. Not nothing guaranteed, but I'm just shooting because you buy certain content, certain people, ideologies and different, philosophies or content, whatever it may be. You gotta remember none of that's legal advice. So if you use it, you at your own risk. And that's why a lot of disclaimers, state that this is not legal advice. So even in my situation, when I incorporate registered agents, I learned that they can't give me legal advice, but by me knowing enough, I was able to go ahead and incorporate different, structures. And I just was good at, creating contracts myself. And I ain't taking title, that's what I'm doing, but and I say that, based on my trust documents and agreements and things like that. So now, there's one thing about mostly all big companies, big institutions, they all gonna have this in common. They all gonna have some type of general counsel, some type of in-house counselor, some type of, somebody could go to that's gonna be the face for them, that's gonna speak to them. If something going on, the attorney gonna go to court for them and things like that. And that's why I'm big on pushing that, because everything in business is law. Because when something go wrong, what's gonna happen? You're gonna need an attorney to get you out of it. So in business, I'm big on hiring an attorney, because we was growing up in the era I grew up, you gotta have money for rainy days, attorney money, etc. So we gotta use that same procedure, man. You start these entities and business model, why not, have a sit down with these attorneys and things. I mean, I did it since I've been back around and things like that, and I didn't get the full response I was looking for, but just touching bases with them and things of that nature. And that way you ain't just going off, what you think are working. With that, you going off somebody that's in the field that's telling you what's going on now. You know what I'm saying? It's good to have one that you could kind of guide and, hopefully could, respect that your knowledge is real vital to what he, could, monetize for you and with you. So, and don't get me wrong, you got good consultants. There between advisors and consultants, okay? So let's clear that up too. So, you consult more your partners, and to a certain extent, your advisor, somebody that's giving you good advice. But when they add legal advice, now they actually taking on the title that, they kind of could stand somewhat in a stone with you, because now it's based on they, more of they bar, associations or certified public, accountant, whatever the, public, give them as certificates or whatever it may be. So with that being said, we need to be focused on not just so much of the word high value men. I see that's a big, slang now, but I still don't see enough people like me that's trying to build high value companies. I understand, value yourself is price and don't have money to it, but high value assets and companies, it will pay the individuals all. So we can't get caught in the hype of being a high value man if you're not focused on building a high valuation company. So with that basis said, I'm going to the next subject based on business credit and company valuation. Yeah, we all familiar with, the business credit and, the opposite of personal credit, the 3 credit bureaus. Now you guys, Speedy and I think Equifax, that's tapping into the does, that's merging and different things, that's monetizing and monitoring the business credit and transfer and things of that nature. So, so that's based on the business credit that, offer your pay that score and different things. You got the small business financial change that actually, I guess the data distribute itself over there to, Paydex, which I mean to Dun and Bradstreet. I know a lot of us familiar with Duns and the net 30s and things like that, but I'm on the other side. Like I always tell you, education with equity starts. So company valuation is big for me and people that I sit down with to understand like what this company's value on paper, with the functionality of this company using the 3 prongs that could be broke down and the magnitude of high valuation. And don't get caught up in that, because anybody can create a net worth evaluation, but creating a cash flow is everything, because you can't fake and put a cash flow. Again, you can have probably some type of reflection of finance statements, but the thing is, with you value company, you could take this company that's on paper. I let it use a trucking company that's 300,000 revenue, we multiply it 4 to 10. You do the math, 300,000 a year, we multiply it 4 times. We say that this company worth 1.2 on paper. Or we could go set up a Delaware corporation where they'll have too much of regulations on how much you offer the face value of shares. So you set up $100 a share. Now this company worth 100 million on paper, and that make you a paper millionaire on paper. Not to get caught up in the hype on millionaire on paper. It's just about really building out, you know what I'm saying, the real cash flow, about using the asset value as a way to get more funding, all different things. And so the second prong would be the comparative. You can find your industry, what type of companies that's in this industry that's saying this company worth that amount of money, like we do with property. You got eyeball the market, I call it. The last time this property sold over here, we go compare with this property, so we know these properties selling in that range of, just say the last property sold over 250. So that means we gonna get this property estimation of it's 240 or more, but you're gonna need a real appraiser. So in doing these company valuation, you'll need, what I discovered, you could get a good CPA accountant and things like that, but it'll be the appraiser 409 letter A, small a. That's what the guys you had to contact. Like I said, we can sit down, and I say we mean like you and your team, or as an accountant, you have your books, saying what it's worth, because it all's a multiple of 10. I let it say 4 to 10. You know what I'm saying? So now you got your company value from the revenue, or they have something that's also the EBIT. You know what I'm saying? If you're into the market, you understand interest before earnings before interest and taxes, armoration and things of that nature. Well, now you could do an analysis on based on that too. And like I said, I'm about the 3 prongs: the comparable, the EBIT, and the multiply. And then you got NAV, which is net asset value, where you take the traditional intrinsic value assets. That's the first way I learned how to value the company that I was building, in different procedures, adding up all the assets and deducting the liabilities and things like that, coming back with the NAV. So it's certain ways to value a company. If it's a paper company, startup firm, or it's a functionality where you got real equipment and different things you using. Because we see Wall Street doing all the time. These companies come out with no substance, great business plan, great investors that's bought into the idea. They got the management, they got the concept, they selling the phone, and then they sell the substance, because first the phone controls the substance, right? And you understand, the phone is the picture of you, the body is the substance. So they come up with these great ideas, and they construct it into what are proposed and different things. They do private placement memorandums. We talked about that on my other codes, and they raise capital, private have for get seed funding and things from angel investors, different ventures and venture capitalists, and different accredited investors, which could be in another layer of high net worth individuals. Then they might want to get institutional investors that's come in, could be pension funds, insurance coming. Like I say, we operate as an institution ourselves, because institution also mean initiate, but institution, we go dealing with, high volume of, securities and things of that nature. You know what I'm saying? And like I say, we the informational cartels also, break down different things. You see what I'm saying? So that's one way of talking about, your business credit. But I went all the way to the equity side, your company valuation. So understanding, you create this company out of equity. If you do borrow money against it, selling your stock, or you borrowing money per se, you understand what the debt to ratio going to be. You know what I'm saying? 'Cause like I tell people, you sell shares of your company, that's equity, that's not borrowing. You selling shares to your investors, etc. But first, you need to sit down with someone like me to show you how to structure your company and issue the securities back to yourself. So now you have you have corporations that's tied to your corporation or your in-house shares through an LLC or your units in your trust, etc. So that's the breakdown based on that part of the valuation and things of that nature. Going around to, if you into, high risk, high rewards, you got any type of, startups where it's like I say, banks don't want to deal with them type of companies in the beginning. So you got to be able to, attract investors of your inner circle. Like I say, issuing shares to yourself and family members and things. So now that's how you set your company up on the equity side. You see what I'm saying? So now you borrow money, that's debt finance. You sell shares, it's equity. So that's not, people think that it's not borrowing money. It's different from an investor coming and buying shares and a lender lending you money. A lender could act as an investor, but they're both investors, but one is actually lending you money with a debt obligation. One is buying a share of the equity of the company, where you measure how many shares and what the type of equity you want to sell out of your company, from small percentage or high percentage. And we'll go more into that. And next I want to talk about how important it is to understand assets protection and the layers up to trust. Meaning, like when you first set your LLC up, people talks about it's a separate entity. That's a certain protection. That's why it's a limited liability company. And there's no right or wrong way. It's not a way, other way. It's a bunch of ways to have your structure set up. But after you have that, you may have your C Corp or your S Corp. They may be somewhere in your structure that might be the management or holder of that one. So with having the LLC separate you, but you don't got the employee agreement like we were talking about that protects you, that say that you the CEO, the president, and I'm the chairman myself. So you need the agreement stating that you're not the pure owner of this company. So now as you got all that, now you have some type of holding company. It could be a Delaware structure, Wyoming structure, or Nevada, or some type of offshore structure maybe. But then the trust still own that structure to a certain scale. You got the trust top layer, and you got the holding company that's managing the assets that could be part of the operation that's doing business in the public with people. And I know I kind of talked about this on different, courses or videos or just content. So that's the real asset protection, the private trust. You know what I'm saying? You got irrevocable and you got revocable, and the categories go down and so far and so on. You want to make sure that you're doing a seller the trust. You know what I'm saying? Where you the seller, somebody coming to sell it and make you the trustee. You make somebody a trustee and they got beneficiaries that could be your heritage, or it might be for your ideas, or you want to give back to the community, and things like that. Won't be a philanthropy and things of that nature, whatever it may be, because that could be another form of a foundation. So now let's move on from the assets protection. Like I broke down from the LLC, moving up to that's the operational company that could be separate you from your, personal assets. That's limited liability. That you might have got another LLC or S Corp, C Corp that's controlling that one, and you got to trust that on that, and don't get caught in the double taxation. Because remember, when you have a C Corp, one of the loopholes is when you're receiving the dividends back from the C Corp, what makes it not double taxation, subject to double taxation, is you as an individual not receiving the dividends. Your other holdings or trust is receiving that dividend or that interest, whatever it is that paying back out. Okay, so now I want to get to the main topic I want to talk about on this content right here that we was going down. You see, I showed you how to actually work not outside of yourself, but build within self. But don't forget that, don't get caught up on an individual high value. You're supposed to be priced anyway, but we got to work on building billion-dollar companies to trillion-dollar companies in this age. Everybody's stuck on millionaire mindsets, but we need to be past that stage, right? So let's talk about this. The secret is in finance literature. And why I say this is not because that's a part of my business model, but a lot of y'all, I feel most of y'all have y'all business idea and model figured out. You see what I'm saying? That's what I see. A lot of people have their business model figured out. Now I'm not saying that they are perfect at what they're doing, but I believe in perfection. So it is a perfect world to me that we live in, right? So the thing is, you understand your business model. Now you have nice different strategic moves that you make as time go on. So first you go from an idea that you create it out of, out the, like I say, the foam, and you turn it to substance, right? So before you turn it to a physical substance, you go get it on paper, which could be a form of substance. So you got a business plan proposal, then you set up a corporation or LLC to, to incorporate, your business model. So now you have the idea, the plan, and the strategies. It's three different things. You see what I'm saying? It's easy to have an idea, but then make it out a plan. Then find a way, the strategy, how we gonna, get to the next dimension of what we trying to do. So with that being said, I believe the secret that everybody be looking for, and I'm not saying it's a collective, a lot of our people that woke up to finance literacy, right? The secret lies in the finance literacy, because the more you understand the finance literacy, you start understanding the different concepts on if you want to borrow money, dealing with debt finance, what type of different options the banks and private lenders and different people that's providing capital, what they offer, what the requirements is. You'll be more confident to call or, apply for certain things that's out there for us. Now, even when you're dealing with equity finance, you've been doing your due diligence. I ain't saying be a brainiac or a diligent guy like me, but just, take a time out and inform yourself in different literacy that's dealing with your finance health. You see what I'm saying? Because we understand health is wealth, right? And we understand without mental health, you have nothing. So the thing is understanding what's going to ease you into what you're trying to do. Understanding what you really doing to overstand, to monetize more, so you could get better at, understanding, where to play at, how to pursue things, dealing with finance, how to get funded to actually expand your business model into the next level. You know what I'm saying? For working capital, expansion, or you won't buy other companies or performing assets like apartment buildings and strip malls and, different things, do with commercial real estate and so on and so far, and get involved with private equity, because now you know how to get the funding and you know how to expand the funding. When people speak on the rich and wealthy folks use all this debt, they also sell equity too, like I try to explain to people too. But the thing is, when they're using these debts as lines of credit, etc., what they doing, they constantly extend it. So they don't just get their first million or 100 million. That sound like a lot of money. They constantly extend it. So when they go back, it's not just based on their personal credit. Now it's dealing with the collateral, what they did acquired. You see the difference? So now, if they got 100 million to $1 billion in lines of credit and, different other, intrinsic value that they doing, now it's like they constantly never really run out directly capital. See, you can't, you always gonna need money, which is capital in business, as you do business. That's why you see big companies always doing different rounds of funding, and they selling, if they go public, they're selling what? Initial public, offers, which become public equities. If it was a private held company, it'll be in the private market, but it's public. They constantly do sometimes different, outstanding shares that expand out, you know what I'm saying, which sometimes they do splits. So you see, no matter how big these companies get with, $100 billion valuation, now they moved into the $1 trillion valuation, they still what? Getting funded through the public, or they still got their private held, entity control to get funded, because they understand to keep, expand for the market. They want to move market share, whatever they want to do. So you can't just get complacent and comfortable saying you got a couple $100,000, a couple of $1 million, and just go off the rampage and I'm a millionaire now and I got this. Hey man, we got more work to do, man. Now I ain't saying everybody want this type of, abundance. You see what I'm saying? But if you do, don't get complacent, and get caught up on the status. Understand you want power, because power is the overall view of things. You got rich and wealthy, but powerful people control all that. You see what I'm saying? So you won't be in the powerful category. So with that being said, I just was, going over this course to break down the different layers from legal assistance, business credit, and company valuation, asset protection, layers up to trust, and the secrecies in finance literacy, I think, because I don't believe in no secrecy, but you still looking for the secrecy. Just get more in tune into, what's going on with the finance literacy, because the finance literacy is going to correspond with the corporate structure. It's going to give you more advantage on understanding what corporate structure you're going to need for the best finance decisions that you want to make with your legal assistants, people that's really in the field that give you real legal advice. And that's the catch, and that's what I'm here to talk about today. So I can't go no longer this. I'm going to go ahead and let this video go out. Peace. Later. Shouts out to everybody out there. One.